we have this large question that's been floating around markets around U.S. exceptionalism and what sort of the end or sort of curtailment of U.S. exceptionalism means, and that's sort of this debate in the eye of the beholder. But for me, I think that the manifestation of that is the weakness in the U.S. dollar, the questions and uncertainty around Trump policy, sort of the weaponization of dollar, or potentially the weaponization of U.S. treasuries as well, has created, I think, a lot of global consternation, which sort of manifests itself in terms of this steady weakness in the U.S. dollar. And as you say, the turnaround blowback to that is a positive for earnings in the U.S. equity market. And then I'd say, additionally to that, the actual sort of fundamental backdrop is actually improved. If we look at the sequential growth of earnings of big cap tech in the U.S., it actually improved in this most recent quarter after some slowdown in the back half of 2024. And I think that sets up for a fairly favorable backdrop for the back half of this year.
Yeah, and for the second half of this year, what is your single best idea when you think about sort of going beyond the U.S. exceptionalism, looking at the global equity market, your favorite?
So I think there's a few. The really big theme that we're thinking a lot about is however we want to sort of define it, whether it's re-globalization or de-globalization. I think the backdrop of all of that's happening around the world is this move from a sort of multilateralism around the globe to a unilateralism, and that's most obvious and manifest in terms of the Trump policy. But the reaction around the globe is countries everywhere having to focus on their own domestic prioritization, and we've seen this happen in terms of the fiscal and defense spending bills out of Germany, but we've also seen it manifest itself through self-help action stories across North Asia as well, whether it's the corporate governance reform in Japan or the value-up strategies in Korea. And so we're actually quite positive, I'd say globally, on the domestic stories, where the domestic, so if you're looking within Europe, for example, the more domestically oriented companies, we've seen this first in terms of the defense and the financial services sector, but then I think the next flow through will be in terms of the infrastructure and industrials across Europe as well. And then the last thing I would say within emerging markets, we're quite focused on the countries within emerging markets that, again, have their own sort of domestic self-help stories, where there's a domestic growth story, and then also, in some cases, a high level of interest rates where there's potential for additional monetary accommodation. So in the short term, we see this quite favorable within Brazil, and then I'd say more on a medium-term basis, continue to be favorable on the Indian story as well.
The irony, I think, here is that, the president and also the vice president, they weren't exactly polite about it, right? But they've finally gotten places like Europe to do what they've needed to do, and probably should have done more than a decade ago. So it's finally happening. They're opening the fiscal taps, right? They're going to have to pay for it somehow, which opens up a heck of a lot of opportunity for public as well as private money.
Yes. Yeah, that's maybe the joke, right? The MAGA, the Make America Great Again, is maybe the MEGA, right? Make Europe Great Again. And I think it's a very important point, because we've seen really the reaction around the globe to this sort of unilateralism is countries then sort of turning inward and say, how do we help ourselves? What do we need to do? And in many regards, that is opening the fiscal taps. That draws a very important longer-term question around fiscal sustainability and sort of debt bubbles from a sovereign side. But I'd say in the near term, really this sort of, again, this fiscal self-help is really the story that we're leaning into.
Right. How are you feeling about Japan? Because their self-help is mainly through improving corporate governance, right? And the key metric that I think foreign investors are laser focused on usually, anytime they look outside, is ROE, return on equity, right? And for Japanese equities, I think we're up in the low teens, which is pretty good.
Yes. Yeah. So I was actually just in Japan this past week, and remained quite favorable on this domestic self-help story around the corporate governance reform. And I think that the interesting aspect to me is there's sort of a unique timing mismatch in terms of some short-term expectations from investors globally versus the long-term sort of benefits of the corporate governance reform. And you talk about the return on equity across the Japanese equity market having moved from the low to mid-single digits up to around 10% or so today. But investors are very short-term, many regards in their time horizons. They say, what are you going to do for me tomorrow or for this next week? And a lot of what's happening with Japan is a sort of a multi-year story. And I think what we'll see, looking forward, is this continuation of the benefits across the improving returns in the Japanese market.
So, a multi-year story for Japan is a lot of this going to play out through M&A and creative destruction, right? Especially in the small cap space. I'm not sure whether you're focused on those, but these are all the companies that nobody really knows about, or there's not much coverage as well, right? But these guys are part of the supply chain for the giants like the Toyotas of the world, et cetera, right?
Yes.
A lot of them have not been making money for many, many years. They're zombie companies, right?
Yes. Yeah.
And in this kind of environment, people do see creative destruction happening, and a lot of release of fresh value.
Yes, yeah. So, for example, like in our Japanese funds that we manage, we historically have seen around 1 or 2 sort of corporate actions of our portfolio holdings on a given year.
Yeah.
This last year alone, we've seen 6.
Nice.
So that's a great example of this playing through. And it's happening both in terms of domestic consolidation, Japanese companies acquiring or merging with other Japanese companies, but also in many cases management buyouts, management's realizing that the undervaluedness, that they're a potential threat or target, and so they just buy themselves out. And also, of course, we've seen international, right? International coming in into the Japanese market as well.